Hey traders, happy hump day. This is Ron Haight. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. All right, thinkorswims on your screen, daily chart of the S&P 500 ETF, the spiders. Before we head there, we can see the SPX lost about 80 points. Dow was down 700. Bonds were up a little bit, gold down a little bit, and the VIX did pop. So let's dig in. If I zoom in here, you can see the peak, the trough, and here we are. This island reversal on the daily chart is still in play. Now we want to watch the 50-day moving average in orange. That is an institutional moving average. It's a big one. We get below it, the bears get the edge, and that just galvanizes, confirms, additionally, this island reversal pattern that is still in play. We now have the lowest closing low since, pretty much since here on 6/11. This will get interesting. Now, maybe a trading range is developing where this is going to be the peak, this will be the trough, and we're just going to go bouncing around. That's why that 50-day, because right now it's even underneath that low, it's going to be so important to keep an eye on. If we take a look at the Dow via the Diamonds ETF, down about 2.63%, $6.87 was the loss. Let's zoom in here. Island reversal also in play. This could be the beginnings of a trading range. However, the 50-day again is going to be very, very key. Note the volume did not spike in a big way today on the Dow. If we go back to the S&P, spiders, it did spike, but it wasn't massive like we saw over here, but it still was a spike. So if you asked, well, how does that, what does that really mean, I guess, in the context of things? Hey, a rise in volume closing near the lows of the day, that is concerning. If the volume was even higher, that would even be more concerning. So definitely something to keep an eye on, but it's really right now about that 50-day. Now, if you're wondering, well, when we were back here, you said, hey, watch the 20-day, and then we were down one day and immediately got right back above it. That's why I'm not saying watch the 20-day here. It's not that big of a deal. Right now, the 50-day is the bigger deal. Take a look at the Qs, down over 2%. Zoom in, all-time highs. We're above the red line. We're not even below it. That's how strong this trend still is on the Qs. So if the Qs are looking good, how does Apple look? Amazingly good. It lost a whopping $6. So instead of being above 370, now it's only a 360. Big whoop-de-doo. Here, I would really watch the 20-day EMA because there was only one brief day below it here, one on 421, and then going back to 4.6 where the turn was. So watch the red line on Apple. So Apple's still holding up, Qs are holding up, but the SPY and the Dow are getting close to breaking down. Here's the VIX, up 7% today. It did get back above moving averages, so we have popped, we've pulled back, and now we're starting to get up there again, but we finished off the highs. If we get another big close on the to the top end of its range tomorrow, that would be a bullish chart pattern for VIX. All right, let's move on to some other stocks here. I got a question on Tesla. What's it doing? Tesla's just being Tesla. It's all over the place. We crossed the $1,000 mark a couple weeks ago. Today we closed, what, $960? It's on sale. Now, interestingly enough, if I zoom in here, this red line, since the stock got above it back on 4.7, has been a support point. Now, Tesla is very squirrely. It's like a kid on a sugar rush at times. It's all over the place. But from a symmetry perspective on a chart, it's very symmetrical. We get below that red line is something we have not done since back at the beginning of April, 2 months, almost 3 months ago. That is something to be put on notice for. Now, the issue with that is, look over here. At one point, we closed at 780 or something. By the time the next day closed, we were at 670. That was over a 100-point drop when we broke that red line. That's why this is, you might think that's the potential trailing stop, but in reality, you could be down here, 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 or anywhere if that stock really has a bad day. But still, technically, the stock is bullish. One small concern, we haven't even been able to get above that high or even challenge it, really. That is the all-time high from 610. Right now, we pulled back, we got back up there, but it's almost getting a rounded top. Yeah, it looks a little ominous, but again, it's really all about the red line, in my opinion. There was a question I received on like Simon Property Group, Cheesecake Factory, and the idea that some of these businesses can't pay their rent and what's actually going to happen. So no one really knows, but here's part of the deal. Imagine being in your home, you have a set number of expenses, and there's some money there for fun things. And if you lose some of that income, the fun money goes away, but you still have to meet the monthly nut, if you will, that baseline. The same thing goes for the renters in the malls and so forth. Cheesecake Factory, for example, they're just not going to pay rent, but neither are other stores around the country. There's not enough profit for someone like a Simon Property Group to just say, okay, we won't pay your rent, but we still need you in there. They're going to need to get them out to get someone else in to pay them something. But something is going to be better than nothing. And this is the war we're going to see. How long can, just as a hypothetical example, an SPG, Simon Property Group, allow someone like a Cheesecake Factory, a non-payer, to remain in their establishment before they themselves end up declaring bankruptcy, because the banks aren't going to just forgive the loans. The taxes still have to be paid. And that's one of these massive problems with the idea of these quarantines. Um, there's less tax revenue. So now what are the city, the county, the townships going to do when they need this money when the rent's not being paid? So now the income is lower there. And this just turns into one gigantic problem, which is why the quarantines will eventually just put us into a depression. There is ways to do it, masks and all that other good stuff, etc. But if you just shut down the economy, it doesn't really matter about being safe. There'll be nothing left in its aftermath. Everything is going to collapse. And that's this balance we're going to have to try to figure out. All right, how about Skyworks? Another question on this one. Before I do Skyworks, I didn't even do SPG. Hold on here. So here's SPG. We're still above the 50-day. This was really choppy. Then we had the thrust, and now it's come right back down. The red days are beating the green days. This is not a good sign. If it breaks the 50-day, there's some horizontal support around $50, but geez, that's like $15 lower. And then if we do Cheesecake Factory, since we talked about them, chop, 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 then we get the thrust, now we're back to the 50-day. We get below the 50-day in our range, that institutional moving average, then we come right back down here to this low and then back down to that double type bottom. Just to cover those two, since I mentioned them. Now, Skyworks. Really bullish, 67 up in the 130s. It's still above the red line. This still can be considered a bull flag, can be considered a pennant. I would say if you draw a trend line in here and we break it, that's even more bullish. But when it gets below the red, because it hasn't been below it since what, 421, that's going to be a change in investor sentiment, I believe. So below the red, we go to the orange. Below the orange, then we come all the way back down, maybe into here. BBY. Best Buy. Now I bring this one in because I get a lot of questions on these trailing stops. The red was working really well, 20-day EMA, and keep in mind, it worked so well that once we got below it back in February, it stayed below it even on 3 straight attempts. We get above it, it's been money from what? That closes around 62 until we closed below it here at 76, not bad. Now it's been choppy, okay, so now what do we do? Because now there's even the potential for a near-term double top too, which actually occurs at a previous resistance point, interestingly enough. If we get below one moving average, we just go to the next. And what happened with the next one, which would be the 50-day institutional line? We hit it and we got bounced really quickly right off of it. So if we get below there, that to me is a big sign. So if you're watching BBY, keep an eye on that 50-day. How about Chevron, CVX? 51 doubles its value, and then we still have an island reversal here in play. Gap up, gap down, and now we just cleanly broke the 50-day. Its next major support point, there really isn't a whole lot. Maybe 79, 80 bucks, maybe 68, 69 bucks. It's actually down there at 50 is the big one. It's going to be very, very interesting to see how these oil stocks perform. Then you take a look at something like National Oil, Varco, NOV. Here's an explosion higher with the whole market. We gap down. This is an island reversal. Usually you want island reversals way up here like we saw in the S&P and the Dow, up near all-time highs or after a big run. Here, there was a little bit of a bounce, and we already have one. The fact that it closed lower today, this is going to be a new closing low since April. I would say, frankly, the big target now is going to be 9-ish or 8-ish. Yikes. And Darden, remember, they report tomorrow morning. I'll cover them in the weekend video. I don't think I'm going to do a video tomorrow unless the market gets wild and crazy. Then I'll do one. But Darden reports tomorrow morning. I want to see, like I said in Monday's video, where are we in terms of in Darden's earnings? Are they coming back enough to offset the stores being closed because they have that real estate they got to pay for? You know, takeout doesn't cut the mustard. It doesn't pay the bills. They need the whole room filled, not half the room. So we'll see what their guidance is. See if there's actually going to be reactions, or is this July earnings reporting season, which is only 2 weeks away, is it going to be another yawner like it was back in April, which was surprising? And here is Uber. Last but not least, they dropped today. The volume was a spike up, but not huge. But here's the thing: we hit the 50-day, bounce, 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 and look what happens. We can't get above the red. So we were using the red Now you break it, you hit the 50. Now you can't get above the 20, ping pong, and then you just break down, cut out the low from before, you undercut it. Now your target's going to be 27-ish, maybe 10% lower. Then you go, I don't know if that one day can stop us down there around 23, but pretty much if it breaks here, it could open the door to something like this, just purely from a technical perspective. So that is it again. Thanks, Dave. Thanks again for all of happy Father's Day wishes. Hope you guys had a fantastic weekend as well, and I'm glad you guys find these videos helpful. Again, I'll be back with you in the weekend video unless tomorrow turns out to be cray cray. Have a great day, everybody. See you later.